We have just about 1 month left in the year, and that means it is tax planning season. Now, granted, you should be tax planning all year, but the last month or even last 2 months of the year are very critical because you need to get yourself an estimate and you need to figure out what you can be doing for tax planning purposes before the end of the year. Because usually, most everything you can do for tax planning must be done by December 31st. Now, of course, there's a few other things you can do, like make contributions to a retirement account or something like that, but usually 95% of all real tax planning must occur before December 31st. So here's what I personally do and what I recommend to my clients so that they can go into tax planning season with a bang. The first one is retirement accounts. Towards the end of the year, we do look to max out those retirement accounts. It may or may not make sense for everyone, but if you have the ability to max out that retirement account, you can see some tax savings by doing so. Another one is tax loss harvesting. If you sold a property at a gain, or maybe you sold some stock early in the year at a gain, and you have any unrealized losses in your portfolio, you could go ahead and sell those off and utilize those capital losses to offset that gain that you had earlier in the year. Now, be very mindful of the wash sale rules, because if you are not careful, then you may actually be unable to use that capital loss to offset your gain. So always speak with a tax advisor or your financial advisor on something like this. A third one is utilize bonus depreciation. Bonus depreciation is 80% this year, and next year it is going down to 60%. So if you are a business owner or you are a real estate investor, go ahead and get those different pieces of equipment, furniture, or whatever the case may be, and utilize that bonus depreciation to lower your taxable income before the end of the year.